Just explain some of that demand story to us.
You're right. The big swings in our business is traced primarily to the pandemic, whether we had stores open last year, whether there were stimulus checks, which are no longer there. So those are the major swings, because if you look at the jewelry category in general, it's a relatively stable category. So if you take the US, for instance, as you mentioned, it's down 12 points year on year, but up almost 60% versus 2019. So underlying, we have a very healthy business in the US. Of course, there's not that stimulus checks that were launched in Q2 of last year, prevalent this year. So, of course, that was part of what we anticipated for the year. Actually, that kind of unnatural growth last year was bound to come out at some stage. You're looking at Europe. We had a lot of lockdowns in Q2 last year. They are not there this year. So therefore, you get a little bit of help of that. But on top of that, we have a kind of healthy business in Europe. And China, we had actually hoped for less impact of COVID than what we have experienced with this zero tolerance policy. So that's been a tough kind of situation in China. So you're right. It's very much driven by the pandemic.
Alexandra, it's a strange old retail environment. Some parts of the world have stopped spending as much buying products and spending it on services. Others are pretty much buying everything at the high end. What are you seeing in terms of interest rates? Because we've had moves by central banks here. How recession-proof and to what extent is the business proof from a central bank action where higher interest rates destroys consumer spending? Are you seeing any cooling off at this stage?
If I look at our business and we look at all the kind of typical retail metrics, so we look at traffic, conversion rates, basket size, and all of these things, we can actually not trace any of that having come into the numbers. That's obviously not to say that it can't come. But if I look at the first and second quarter of this year, we have not seen any of that. Part of that could also be that our business is relatively recession-proof in the sense that it's an affordable proposition. So people, when it's a bit tighter maybe in the purse, then we actually offer a very attractive proposition. And we should also not lose sight that we're also, to a large degree, in the gifting business. People still continue to kind of manifest their anniversaries or what have you. So far, it's looking pretty good on our side. But as I said, I don't have a crystal ball. And of course, inflation is kind of at record high levels all around us. So there might be something coming through in the future. Then if I look at the input side, we are relatively not so hard hit by inflation so far. We don't have a high freight cost. I mean, our products don't weigh an awful lot. If I look at silver price, we're hedged. And in fact, when interest rates go up, silver price goes down. So we should probably be expecting some tailwind from that coming into next year as our hedges are coming out. So far, actually, it looks pretty good.